going on, everyone? My name is Kenneth Beard here with Stock Indices, where I go over economic data reports and I go over technical analysis and put that all together for you all to have an assumption and make good money-making trades. Money-making trades. All right, so today is Friday. It's the end of the week, and the economic data reports that I have currently have not loaded up yet. It's pretty early in the day. It's not that early. It's 11 o'clock, but usually the economic reports don't roll in around 1, 2-ish, and unfortunately I have something to do later, so I won't be able to get to those. But we're going to hop straight into the charts and break down exactly what's been going on and how the markets are looking currently. So first thing we'll be viewing today is the VIX volatility. So let's make my big head over here smaller. So volatility, on a quick note, is dropping right back into its range that it was currently in from 18, now sitting at about 16. So rule of thumb here for VIX is whenever volatility sees a strong move towards the upside or sees a strong move towards the downside, we almost always see a reversion back to its mean level. So it always reverts back to the mean. So had that spike in volatility due to higher than expected core CPI and inflation numbers, and today we're seeing that number kind of deflate back to its normal levels. So volatility is seeing a good push downs, and we're seeing that fear start to slowly exit out of the market. So how does that affect the ES, the E-mini S&P 500 futures? So on the daily chart, we can see had this indecisive doji candle at the bottom, and today we opened up and we're pushing higher. So we're seeing some strength today, some overall strength in the markets. And I want to make, give me 1 second. And so we're seeing that overall strength. So my thoughts on this is today, if the market closes strong above the high of low, if we get a Cahode close above high or low day, then I think that the market will continue to move towards all-time highs and break out of all-time highs, and we'll get that continuation of the all-time highs. So that's essentially what I'm looking for here on the Cahode and on the S&P 500, as we're seeing some strength step back in on this 2-candle pullback. For the RTY, we saw a green day yesterday. Today, it's looking a little bit weak, though. We're seeing some weakness as the market opened up and is currently down. If we look at the 1-hour chart, I kind of did this upwards trend line. If we break below here, then we're entering back into that downwards movement territory. We were above the value area high, but if the value area high does not act as some sort of support level, and we get right through that and we start moving back towards the downside, then I think that's, and also on the 1 hour, that's right at the 180 SMA, which you can see here bounced multiple times. We came down, came through, and so what I would want to see is it stay above this 180 on the 1 hour chart. As far as the daily goes, though, we're still far, some space, about 2.76, somewhere around there, 2.8% away from the moving average. We're not right on it, and so we still have some room to move towards the downside So it could essentially hold here and then decide that it wants to pull back down. But we had that big move up, and then the momentum is kind of slowing down here for the RTY, the Russell 2000. So we want to see how that plays out. Still got some levels up above here on the 1 hour that I have charted. These are some resistance levels and support levels up here that I would want to see break out, and we could essentially maybe see this start to trade up into a wedge before breaking out towards the upside. Just a few ideas that I have currently on the Russell 2000. Where'd it go? Okay. NASDAQ here. NASDAQ here also seeing some strength. We had a open and a close inside of this body and a continuation. Seeing some strength today, which is a bullish signal. So I'm thinking for the major indexes, we may be starting to see reversals. It could be too. I think the confirmation will be to see next week, Monday, that it really give us that confirmation on whether or not this is actually something that is going to be maintainable as far as the buyers taking over the trend once again, as we were before previously seeing with this rally. And this is a larger pullback, but that's only to be expected when we have from the lows a how many days was this? 32-day rally, almost a month rally from the lows. So that's only to be expected. And the last one I'll be looking at is the DIA. DIA also seeing some strength coming in here. Not that much strength, but it's the closest one towards the moving average, the one most technically closest to the moving average. So that could be a technical indicator that you may want to be looking out for there on the daily chart for the DIA as some sort of psychological level of support there on that one. On the 1 hour though, we're floating under the 180 day, so there is some resistance up above here on the 1 hour that this psychological level will have to break out of. But once we get above there, clear downtrend here on this one, we break out of there, and we see a strong close today on the daily chart. I think that could also signify a reversal. So today, the moral of the story is that we've been seeing some strength come in back into the market with lower volatility levels, indicating to us that the market is essentially going to be going back to its normal levels, and we will continue to see the rally towards the upside. Now, that is not for certain, but in my opinion, I think that if volatility stays at a low level long enough for the market to then recalibrate itself, I believe that we can get back to all-time highs, as well as just a lot of stuff in the news. I was watching the news yesterday talking about the White House is working very hard to maintain this inflation, and so that could also have a very big impact. So here, as this is Yahoo Finance, as I'm reading, it says the rise in prices carries implications for both for corporations, many of which have to try and pass rising prices to end consumer preserve margins. And for Federal Reserve market pricing currently suggests that the Federal Reserve will step in by mid next year to raise interest rates to try and tamper with the broadening inflationary trends. Still, many economists, so they're going to raise inflation to kind of, not inflation, raise interest rates to kind of balance out that inflation problem. So there's not so many people willing to go out here and take up all of the demand, and then they have to raise the level of supply. And then they not just raise the level of supply, but they don't have enough supply, and there's too much demand, and they have to raise prices, which is causing that inflation trend. Still, many economists have affirmed that the inflationary pressures will eventually ease, albeit while likely settling at a higher level than had been present before the pandemic. Inflation should be moderate. We're talking about settling at 2%, 2.5% over the course of the next 12 months. So, Gabriela Santos, JP Morgan, Asset Management Global Markets, told Yahoo Finance. So we're still talking about real wage gains, and that's extremely supportive, certainly of people's livelihood, but also the consumption and hence the economy overall. We do expect a big reacceleration in growth starting this quarter and throughout the next year, and 5% average growth just over the next 3 years, she added. So we would characterize this not as stagflation, but as reflation. And that is the difference. Reflation is actually quite good for earnings growth and quite good for the stock market, especially cyclical sectors. So with that being said, they believe that inflation will be at ease, but gradually over time increase at a normal pace that may be just appropriate for the current conditions of the market, which makes sense. So that's all I got for you guys today. If you guys enjoyed this video, leave a like, comment, and subscribe. I make these videos every day, Monday through Friday. I make this video so you guys can have informative information. So if you see anything in my video that you may want to equip in your own trading, anything that's you may think is cool, about my technical analysis, anything like that, subscribe. I do this every day. You see me here. This is me giving you my God honest opinion of the stock market. And also, if you don't understand what I'm talking about, you're kind of confused, it's your first time here, go check out my Skillshare. It will be up. It will be in the link in the description. My Skillshare is going to give you more exclusive information and show you more in depth as to what it is that I'm doing. If you don't understand volume profile, if you don't understand how to trade options or how to trade at all, by all means, go look at my Skillshare. If you don't know economic data, you don't know how to put that together to make an overall assumption, I talk about all of that. Because I don't really have time to break all that down on my channel. And not only that, it's better when people invest in themselves because they're more willing to pay attention. When I give out free information, I look at my analytics, and some of you guys don't watch the entire video. So, most 90% of everyone do not watch the entire video, so you can't really absorb all the information that I want you to. So I think by someone investing in themselves, the more you invest in yourself, the more you will pay attention. But when you have easily accessible free information, you're less likely to be fully engaged. So if you're really serious about what it is that you're doing, if you're serious about trading, by all means, check out my Skillshare. I don't have anything on there yet, but it will be very soon. I'm just going to leave a link in the description, though, so you guys can know what my channel is, so you can be updated and notified once I start to post my very exclusive stock market information, stock market courses on there. So, by all means, I will see you guys in the next one. Click that video up in the right corner because I make this video every single day, and all my videos are the same. They're like just market breakdowns. Every now and then you get a webinar or something like that talking about something random in the stock market, just because so much information out here. You can kind of make a video every single day for the next 50 years and still have more information. So yeah, I love this. I love you all. Thank you for tuning in, and I'll see you all guys in the next one.